Hi, everyone. Welcome back to Navigating Special Needs Planning. Today, we're going to be talking about how to build a financial plan that supports your loved one without putting their access to programs like Medicaid at risk. We'll also touch on how to bring family into the conversation so everybody's on the same page when it comes to giving support. We're going to see that that's really important in the context of that protection of government benefits. I'm joined today by Heather Flanagan and Rich Yam, who will help us break it all down. So thanks, Heather. Thanks, Rich. Glad to have you here.
Thanks, Mike.
So I'd like to talk about the basics here. As I said, the protection of government benefits, Medicaid in particular. Rich, why is it so important to be careful with financial planning when somebody's receiving benefits like Medicaid?
Yeah, Mike. It's important. So in order to receive needs-based benefits like SI or Medicaid, recipients can't have too much income or assets in their name. And the income and asset limit depends on the actual benefit that we're talking about. So for example, for a federal SSI, which provides monthly payments to cover basic living expenses, the recipient can't have more than $2,000 in assets. So it's a very low threshold. Now, for Medicaid, which provides medical care and Medicaid waivers, which can pay for programs such as job training, residential and day rehabilitation services, and supportive housing, all of which help your loved one develop skills necessary for independent living, community participation, and a better quality of life. So Medicaid is a very important service you want to be eligible for. And Medicaid, because it's administered at the state level, the income and asset limits vary state by state. So, for example, in Connecticut, to be eligible for Connecticut Medicaid waiver services, the special needs person can't own more than $1,600 in assets. So the rationale here, it's very critical for family members and friends who want to provide assets for special needs loved ones, not to leave those assets outright to those folks.
I think that's an important point. And Heather, maybe you could help us expand on it. How should families approach conversations with grandparents or other relatives who might want to give money, gifts to somebody with special needs?
Normally the families are pretty, well aware of kind of everything that the core family is going through and how much work it is to kind of make sure that they're preparing for and qualifying their special needs loved one for various benefits. So it's an extension of that conversation. It's kind of like, now here's your part. We know you love us. We know you want to, help us out, but we're going to ask you to do some specific things to make sure that all of this work that we've done to kind of protect our loved one is going to stay in place, and all of those plans are going to stay in place, and they're going to be able to continue to receive those benefits. And so you kind of start it out that way and then make it very easy for them, kind of figure out what it is that could potentially, impact the special needs person's ability to qualify, and then communicate those rules clearly to your loved ones. So, for example, in my case, it was my father who was kind of the main person that we had to talk to, who was actually in the process of redoing his estate plan. We talked to him about specifically leaving my special needs daughter out of that estate plan, and specifying that in his estate plan so that she would not, if there was some sort of somebody died before somebody else, that there was no potential way for her to receive funds from his estate. And what he did in place of that is actually set up an ABLE account. And he's been making some gifts into the ABLE account. So that's one way to do it. But people do oftentimes need to specifically address those things in their estate plan to make sure the funds don't accidentally go to the special needs loved one.
So you mentioned ABLE accounts. I know special needs trusts also can be really important in that context. Maybe you can say a bit about that, Rich. I'd like to get your thoughts on that as well. So Heather, how does that ABLE account kind of fit in?
The ABLE account is an account that is set up in various states. It doesn't really matter what state it's set up in, as long as it's a state that allows for it. And anyone in the family can make gifts into that account. I'm going to let Rich kind of list out all of the requirements for ABLE. You also mentioned a special needs trust is another way to go. So my husband and I have set up a special needs trust for my daughter. We funded that with a life insurance policy, and that's another thing. We have another daughter that we wanted to make sure was not financially burdened by her sister, but that could oversee those funds in the event that additional funds are necessary to care for her sister after my husband's and my passing.
So, Rich, can you expand on the ABLE accounts and
Sure.
and the way special needs trusts are used also?
Yeah, I'll start with ABLE accounts. Like Heather mentioned, ABLE accounts can be opened in any states. I think currently there's 46 states and Washington, D.C. that offer ABLE accounts. And you open them online on the state's website. And they are tax advantage accounts. So they grow tax-free. And distributions from the account for the special needs person are also tax-free, as long as they're for what they call qualified disability expenses for that person. So things such as education, housing, personal support services, even financial management or legal services that the special needs person might need. Now, the important thing to know about ABLE accounts is they can only be funded to up to the gift tax annual exclusion each year from all sources. So let's say 5 family members want to contribute to an ABLE account, like in Heather's case here. Let's say her parents and 3 other people want to contribute to her daughter's ABLE account. The total sum of that contribution can exceed, for this year, $19,000, because that's what the gift tax annual exclusion is this year. So generally speaking, when you have a special needs person that has maybe both an ABLE account and a special needs trust in place, you typically want to, for larger gifts and larger bequests, those should go to the third-party special needs trust, whereas smaller gifts and smaller deposits should be left for the ABLE account. Now, for third-party special needs trust, and yeah, Heather touched on it originally, third-party special needs trusts are just for the sole benefit of the special needs person. And then at that special needs person's passing, whatever remains in that trust can go to their siblings or maybe their descendants, whoever the grantor of that trust would want the remainder to go to on the special needs person's passing.
I'd like to make a point about that too, just so that people are aware that there are different types of special needs trusts. There's the first party special needs trust, which is funded by the assets of that special needs person. The third party special needs trust is what Rich is mentioning. Those are 2 very different trusts. They're drafted differently, and you want to make sure that you're getting someone who really understands special needs laws in your state to draft that trust for you.
Yeah.
You don't want to set up a first party special needs trust if the parents or someone outside that special needs person is funding that special needs trust, because those assets then, after the passing of the special needs person, can be directed anywhere else. If it's set up as a first person or first party special needs trust, there are more restrictions on those assets. And so you just want to make sure you're setting up the proper special needs trust.
I think that's really helpful. Thank you very much for taking us through that. The ABLE accounts sound a bit like a 529 plan for a special needs person. That sounds like it could be really helpful. And then special needs trusts help us deal with the larger issues, the larger dollar amounts. And as Heather pointed out, can be funded not just with securities and cash, but also things like life insurance policies and that kind of thing, which can be really helpful when you're trying to make sure, come what may, there's a certain amount available. You can kind of take out some of the investment risk and also leave the other assets for the other members of the family, let them kind of ride the up and down. The special needs person gets the more reliable amount of money through the death benefit. But thank you very much. This was great. We really appreciate your time.